Welcome back to Echoo's Weekly Market Pulse, your go-to series for the wildest IPO action and equity market moves, dropping every week. The equity public markets are absolutely wild right now. Companies are going public left, right, and centre. Some are seeing 100 times more demand than expected, while others are slashing their offerings. Let's break down what's really happening. First up, Take-Two, the makers of Grand Theft Auto, just raised $1 billion through a share sale. Not an IPO, they're already public, but they created new shares to raise cash for future projects. For existing shareholders, it's like slicing the pizza into more pieces. Your slice gets a bit smaller, but the company gets more fuel to grow. Big news in the US, there's talk of taking mortgage giants Freddie Mac and Fannie Mae public again. These were the companies bailed out in 2008, and if they IPO, it could be massive for the housing market. Want to know what Freddie Mac and Fannie Mae actually do? Check out our latest video for the full story. Meanwhile, Brookfield-backed luxury hotel owner Schloss just slashed its IPO size from $600 million to $410 million due to market uncertainty. When a company cuts its IPO size, it usually means investor demand isn't as hot as hoped. Is it a red flag or a buying opportunity? You decide. Saudi airline Flynas just raised $1.1 billion, and get this, the IPO was 100 times oversubscribed. That's 100 times more demand than shares available. Want the full breakdown? Watch our latest Flynas video. Here's something cool. JBS, the world's largest meat producer, just got shareholder approval for a dual listing on both the Brazilian and New York stock exchanges. Dual listing means the same company trades on multiple exchanges. This is like being able to shop for the same product in multiple stores. This gives the company access to more investors, increases trading activity, and can make it easier for people around the world to invest in the company. Dubai Holdings REIT IPO was supposed to raise $584 million, but raised $15 billion in orders. That's 25x oversubscribed. When you see this kind of demand, shares usually pop on day one. Don't miss our latest video for all the details. In digital health, Hinge Health raised $437 million and jumped 17% on its first day. Backed by Tiger Global and Insight Partners, this company is riding the telehealth wave. Ryan Reynolds' advertising platform Mountain raised $187 million and shot up 65% on day one. The IPO was 14 times oversubscribed. Celebrity backing and huge demand make for major gains. Want more on this IPO? Watch our latest Mountain video. We've also seen some big block trades. That's when major investors sell huge chunks of shares at once, often at a discount. For example, Fomento sold its entire $405 million Heineken stake after 15 years to refocus on its core business. Meanwhile, Australian firm BRC bought 13% of Victoria's Secret, and the company immediately adopted a poison pill